Hey guys, it's Matt, your mortgage guy here. Today we're going to talk a little bit about the mortgage process and what it takes to actually get into a home. So, the loan process, some of the steps that go into it. 1, you talk to a lender. 2, get pre-approved. House, get under contract. Once you find a house, then your loan is going to get submitted to underwriting and processing. Once it's submitted, you're going to work conditions, you're going to get your clear to close, and then you close the loan, and you have a house. So now we're going to go a little bit more into depth about what those actual steps mean and kind of a little bit more about all of that as a whole. Alright guys, so talking to a lender, how do you pick one, where do you go from there? So there's a couple big things you want to talk about and kind of think about when you're talking to a lender. The first very big one is you want to have rates, and then you want fees, and then the yield spread. You want to make sure you're getting that yield spread back. I'll get into yield spread in a later video. It's a topic on its own. But rates, fees, yield spread, that's how you pick a lender. When talking to a lender, you want to pick the one that usually has the cheapest rate. Sometimes it's going to be a little different, but you want the cheapest rate without paying points. We'll get into points in another video. It's a whole nother complicated topic, but as a general rule, when you're first talking to them, you want the cheapest rate without paying anything. So, when a lender is taking an application, it's called a 1003, 1003 in the lender's world. And what's going to go into that application is going to be a couple really specific things. So they want to know your name, your phone number, your email, your birthday, your social security number. Yeah, I know it's your social security number. Don't worry, they're only using it to pull your credit. They have to have it for that. After the social security number, the lender wants to see a couple things. They're going to want to see your 2-year work history, and they're going to want to see your 2 years of living history. That's the way they can prove that you pay your bills and you have a history of taking care of things. Yeah, and that's going to be the big things on the 1003. When pre-qualifying you, the lender's going to ask for a long list of documents. Some of those I mentioned before, but there's going to be a link down below, I think is where it'll be, and that's going to have the list of all those documents that the lender will end up needing before the end of the process. So now that you've talked to the lender and he's taken an application and kind of gone over some of that basic stuff, he's going to want to actually double check everything that you told him. As much as he wants to trust you for who you are because you're his best friend, Bill, sorry, Bill. The bank wants to see the stuff to prove it, and that's what you need to get the actual pre-approval. Some of the things that the lender's going to want to see are 2 years of tax returns, your last 60 days of pay stubs, and there's a couple more things that they'll want to go into, but those are the two real important ones. And then once you have those documents verified, you can start looking for homes. You're pre-qualified. Congrats. So now we got you pre-qualified and you're ready and looking for a home. Now is the time to get you hooked up with the real estate agent. They can really help negotiate on your behalf and actually get you under contract on a really good home. They are important, believe me. There'll be a whole nother video on that later though. And once you're doing that, the lender is then going to give something called a pre-qualification letter. There's no formal letter that we end up giving you, the client. That letter goes directly to the selling agent. And that letter says exactly what we want it to say because we work for you, not the sellers. You might be able to afford a $500,000 house, but we're only going to say on the letter that we're buying this home for $350,000 because we don't want them to know that you can afford to buy a $500,000 house. We want to keep that negotiating power to ourselves. So like I said, we're on your behalf. We're only going to tell them what we need to tell them. So once we get that, say all those things go well, we're under contract. Now we're on to the next step. You signed your initial disclosures. We're kind of moving forward. Now the lender's job or the loan officer's job is to structure all of your documents and submit it to the lender. Now I want to remind you of something. The loan officer's job, they don't work for the bank. They should work for you. So when they're seeing all these documents, they're doing all of this, they're structuring it in a way that makes you look the best to the bank to give you the highest approval when you try and get that loan. That is their job. So remember, when they're asking you all these weird and in-depth questions, it's not because they want to know where you lived when you were 5 years old. It's because they want to make you look the best to the bank, and they think it might be ammunition to make you look better when submitting your application. You're going to have a very nice package. The lender's going to make a nice pretty package of all your paperwork and stuff. They're going to hand that to their processor. All of Jimmy's documents now are going to get sorted and put in order and kind of filed, and then there's going to be a whole nother look over by the processor before it gets seen by the underwriter. That's so just in case the loan officer makes a mistake, just in case they miss something, they double typed 0, something is wrong. It's just another set of eyes that protects you, the borrower. And now once the processor gives the approval, gives the okay, now they then submit it to underwriting. Underwriting's the big scary term that everyone's always scared of, because underwriters try and kill deals and all this bad, angry stuff. No, underwriters are here to help you. They want to get you to the home just as much as the next guy. But they're not just trying to get you into a home. They're also trying to protect the bank. They actually do work for the bank. They want to make sure the loan is sellable and good on the secondary market. I'll get into secondary market stuff later. I know it's a weird term. So what the underwriter actually does, though, is they have, for example, on an FHA loan, there's going to be about a 4,000-page book that they know every guideline out of, and that's their job. They're going to take a look at your file and say, okay, well, Jimmy's trying to buy an FHA, or buy a home with an FHA loan. Does he fit these criteria? Does he have any of these guidelines that don't work? Does he qualify? If any of those things don't add up the way the underwriter wants to see it, then the underwriter is going to come back and condition it. So conditions are the underwriter questions. They say, well, what is this? What is this? Why is this the way this is? And usually there's 2 to 3 rounds of questions. So what they'll do is within 48 to, about 48 hours is the norm to hear back from initial underwriting. You'll have a list of anywhere from 1 to 20 questions. It'll be a whole bunch of stuff. And usually it's things like, hey, you forgot to sign this line of the initial disclosure package. Hey, why did you have your credit pulled 6 months ago? Did you open a new line of credit? Did you buy a car? Did you do this? Blah, 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 blah. And then, once you're there, you just answer those questions. And that's the loan officer and the processor's job. Their job is to help you answer those questions in the best light. They'll tell you how to structure it, how to make it look pretty, so when we respond to the bank, they'll ask less and less questions, and now you get an approval. So now, the underwriter looked at all of your stuff, you answered all their questions, you got A's on everything. Congratulations, you're a straight A student, you got your clear to close and pass. Not quite done, but you're really, really close. So what happens now is you have a clear to close. Now the lender, so the bank that's funding it, the title company, and anyone else that's involved with the transaction gets a chance to view it. They say, well, hey, here's my specific fees. Up until this point, everything, the fees and closing costs that you've seen have been numbers that the loan officer, in this case myself, are guessing. It should be relatively close to what those companies will charge, but it's never going to be exact. So now these companies all get a chance to come in and say, this is exactly the fee for this, for this, for this, for this, for this. And then in a perfect world, after all these numbers are balanced, what goes out is called the CD, or the closing disclosure. The closing disclosure is as close as you can get to the final numbers before what you actually are going to see and have to bring to the table to close on that closing table. All you have to do is acknowledge it, sign it, say, yes, I've seen this closing disclosure, and you're good to go. One other thing about the closing disclosure, it has to be signed and acknowledged 3 days before you actually close. The reason for this is the bank and the regulation and the laws, they just want to make sure you've had a chance to see it, think about it, and not be rushed into this big decision. So congratulations, guys. You're all set. You're all good to go. You had your clear to close. You signed that initial CD acknowledging it. You're ready to buy this home. All that's left to do now is go to the closing table. Depending on the state, it'll depend on where it is. In Colorado, where I am, you're going to go to the title company. You'll sit down, and a title or a closer will sit down and kind of walk you through all the specifics. Everything you're signing, what it means, everything else. Usually you'll go over this with your loan officer, the person helping you with the loan beforehand, but sometimes it's nice to just get another opinion and hear what it is. That's the closing agent's job. So they'll help you with all that and make sure you're all set and done. You sign the paperwork and you own a home. Congratulations, that's awesome. You can walk away any time. Up until the day of closing, you can walk away and no one can stop you. You don't have to buy that home if you wanted to walk away. Yeah, you might lose your earnest money. You might lose the cost of ordering the appraisal if you paid for it yourself. But if something happens, if you no longer becomes a good idea for you to buy that home in the 30, 40 days it takes to get under contract, you always have an out. Comment, share, subscribe, hit that little bell below, do anything you guys want. You're awesome. Thank you for staying and watching the whole way through. I know I said a lot of real big words, complicated things. I'll answer any questions you guys have down below in the comment section. You're awesome. This is Matt, your mortgage guy. Have a great day.